The term banking is regulated in Act No. 7 of 1992 in conjunction with Law of the Republic of Indonesia No. 10 of 1998. In Article No. 1, it is stated that banking is everything concerning a bank, including institutions, business activities, and methods and process. In carrying out its business activities, based on the law, it can be summarized that banking includes three aspects, namely, first, institutional bank, second, bank business activities, third, the process of implementing bank activities. The main basis for banking activity itself is trust. This is inseparable from the service activities offered by banks that are directly related to customer or society. Even the service offered by bank will have a broad impact on the economy, society in general. The banking function is closely related to the type of banking. Initially, this type of banking referred to the Basic Banking Law No. 14 of 1967. In this law, the type of banking according to their function consists of commercial banks, development banks, saving banks, market banks, village banks, employee banks, and other banks. However, after the issuance of the Basic Banking Law No. 7 of 1992 and Law of the Republic Indonesia 10 of 1998, the type of banking based on their function consists of commercial banks and rural banks, or BPR. Returning to the banking function, according to Budi Santoso, the main function of banking consists of three things, namely agent of trust, agent of development, and agent of service. The first, agent of trust. As mentioned earlier, banking activities are based on trust. This trust is good in terms of raising funds or distributing funds. Just imagine how we as customers want to leave money to be managed according to the banking activities. All of these things are of course based on the belief that banking activities are carried out properly so that money remains safe and banks do not go bankrupt. Second, agent of development. Banking activities in the form of channeling funds are needed for the smooth running for the company in the real sector. This banking activity also allow people to invest, distribute, and consume, all of which are highly depend on banking. Third, agent of service. Banking also functions as a service agent. This point is that banking activities are closely related to the offering of service to the public. The service in question are certainly related to the economy, ranging from depositing money, depositing valuable goods, providing guarantee, selling and buying foreign currency, paying salaries, sending money to setting bills. Type of banking. According to the law, there are three types of banking based on their function, namely, first, central bank. The central bank is an agency that is responsible for a country's monetary policy. The task of the central bank is to maintain the stability of the price or value of currency in country. For example, the rupiah Indonesia with good central bank operation, inflation can be controlled or has the lowest possible value. This allows for a control and a healthy economy. In addition, the balance of the amount of goods and money can be maintained. The central bank has to make and implement monetary policy to control the amount of money circulating in society. In addition, the central bank is also tasked with regulating and maintaining the smooth operating of the cash and non-cash payment system. Finally, the central bank has the responsibility to regulate and supervise banking to limit the risk of the cause of the system crisis. This is important to maintain the balance of the country's financial system. An example of central bank Indonesia is Bank Indonesia. Second, commercial bank. Commercial banks are banks that carry out business activity consistently or based on Sharia principles. This essential commercial bank provides service in payment traffic. The business entity has the authority to collect funds from the public. The form of fund can be managed by a commercial bank in the form of deposits. These deposits are channeled to the public in the form of credit and other forms. The goal of commercial bank is to improve the quality of life of the people. According to banking experts, commercial banks are profit-oriented financial institutions. Commercial banks themselves have several types based on their status. Two groups of commercial banks are foreign exchange bank and non-foreign exchange banks. Foreign exchange bank is a type of commercial bank that has obtained approval from the central bank, namely Bank Indonesia. to conduct banking business activity using foreign currency. With a foreign exchange bank, you can transfer money abroad, export and import transactions, as well as buy and sell foreign currency. Meanwhile, a non-foreign exchange bank is a bank that does not yet have a transaction license as foreign exchange bank, therefore its activities are limited.
People Credit Bank or PPR. PPR or People Credit Bank are one type of bank that only accepts deposit in the form of time deposit, savings, or other equivalent form. This bank channels these funds as part of the PPR effort. Usually, PPRs are found in small cities that are close to needed communities. PPR can usually be found in the form of village banks, lumbung desa, employee banks, market banks, lumbung nagari or LBN, village credit bodies or VKD, and village credit institution or LBD. In addition, PPRs can also be in the form of a district credit agency or PKK, Small People Business Credit or KURK, Village Production Work Bank or PKPD, District Credit Institution LPK, and others. All of these forms are based on Banking Law Number 7 of 1992. The purpose of the PPR is to serve small communities in remote areas who find it difficult to access commercial banks. How to get a bank loan? First, check your credit score. If you are beginning the loan process for the first time, start by getting your credit score. You can check it for free at any time at sites like Credit Karma, Credit System, and Credit.com. You don't need a perfect credit score of 850 to get a loan, but lenders see your credit score as an indication of your trustworthiness as a buyer and adjust their offers accordingly. So the higher your score, the better. Second, if something looks nice, pull your credit report. Your credit score is 3-digit shorthand for the information contained in your credit report, which monitors all of your credit-related activity. According to the Federal Trade Commission, you're entitled to one free copy of your credit report every 12 months from each of the 3 nationwide credit reporting companies, Experian, Equifax, and TransUnion. Note that there are plenty of opportunities to pay for your credit report, but annualcreditreport.com is the best place to get your report for free. Be prepared to provide your name, address, social security number, and date of birth to verify your identity. Third, know that loans can actually boost credit score. If you are looking to take out a loan to consolidate credit score, debit or pay debt down faster, it can help in more ways than you may realize. Taking out a personal loan to pay down high interest credit card debit can boost your credit score by lowering your credit utilization ratio. That's how close you are to hitting your limits on your credit card. Try not to use more than 30% of your limit on any card. In addition, if you haven't taken out an installment loan like a car loan before, adding a personal loan to your credit mix can boost your credit score. That's because your credit mix makes up 10% of your credit score. Fourth, understand that there are types of personal loans. There are 2 types of personal loans, secured and unsecured. Unsecured are loans which aren't supported by collateral like personal asset or a house. A bank evaluates whether to grant you the loan based on your financial history and credit score. If you don't qualify for an unsecured loan, lenders also offer a secured option which may be leveraged against. If you don't qualify for an unsecured loan, lenders also offer secured option which may be leveraged against asset or accounts you have at the bank or something more tangible like a house or car. Mortgage, home equity loans, and auto loans are considered secured loans since you're putting out collateral. Remember that if you take out a secured loan using your home, your car, or something else as collateral, you run the risk of losing whatever you leverage, so you become unable to pay your loan. Most any lender that offer unsecured loans, including banks and credit unions, will also offer secured loans. 5. Make sure your bank offers personal loan. As Jim Young from Principal said above, to get a personal loan from a bank, you'll generally need to be an existing customer with good credit. Some banks can offer personal loans, so you'll want to find out what your bank does offer. If your bank doesn't offer loans, or even if it does, you may want to get quotes from online lenders, which have fewer regulations and can base their offer less on your existing credit and more on your ability to repay. Online lenders can be an alternative to bank loans or a basis for comparison after you have checked rates offered by online lenders. See if your bank will offer you a better deal. 6. Get your paperwork in order. One of the most challenging part about getting a bank loan is the amount of documentation that required as part of the process. The number of paperwork will vary based on the type of loan you're applying for, but in general you can expect to need pay stub or proof of income, the last couple years of tax return, documentation of 401 and other financial account, photo ID, rent or mortgage history, proof of collateral if you're pushing a secured loan. It's a good idea to get this basic in order before applying for the loan in order to speed up the process. 7. Try and get pre-approved. Although it's not a solid current pre-approval is when a lender extends an unofficial offer on a loan pending full approval. In this instance, pre-approval will tell the borrower what loan amount, terms, and repayment schedule they will likely qualify for in advance. Also, a pre-approval acknowledges that the borrower has met the bank's general eligibility requirement. The process usually includes an application and a credit history evaluation, and while it's a worthwhile step to take, it's not a guarantee that the bank will extend those exact terms when it comes time to issue a loan. 8. Now the terms. Personal loans are installment loans, which when you borrow a fixed amount of money and pay it back. Interest in monthly installment over the life of the loan. The terms of the loan are 2 months and can range from 12 to 26 months. When you complete the loan term, the loan is considered interest. If more money is needed, you must clearly apply for a new loan. 9. Make a plan to pay it back. You continue to make on-time payments and reduce your total amount of debts, your gratitude of improve and